debate any length of time as to which is the better option. I don't think anyone knows the answer.
Mr. Baijal, this was the story for FPOs, which was a small 5%, 10% block being put up for sale. The more tricky one for the government will be when they come and IPO something like a Coal India, for example. How would you rethink the entire process? Because that's really where both you want to get the retail interest in and you want to milk it for what it's best.
Well, if you want a good price in a FPO, if you want a good price when you're going in for an IPO come FPO, then obviously the best option is that you sell majority of the shares, that you do some reforms in the company, that maybe you break up the company, or there are so many structural changes that you do, and then come to the market. Coming to the market on as is where is basis will never get you a good price. But then that is the choice which the political government makes, whether you go in for reform, whether you go in for restructuring, whether you do anything to the company which excites the retail market. But that's a political decision.
Dharmesh, on the other question that we were just asking the former divestment secretary, for some of these FPOs, do you think the more prudent way to approach it now would be to look at doing some kind of quiet institutional placement rather than opening it up as an FPO, trying to get retail interest in, then getting a bit of mud on your face when there isn't any interest, forthcoming?
I think that's a tough, question, because if suppose the issue had got a good response, the markets were good, then the retail investor would have benefited. So I think government chooses to go and benefit the retail investor, and in that process sometimes the market condition doesn't allow them to do the same. I still think that the retail investor should participate in these IPOs or the FPOs, and they should be priced attractively for them. Hence, if you give them a good discount below the minimum price band, I think they will be definitely attracted to come in as they see that upside upfront, because in FPO you're not discovering the price.
Any other changes you think should be ushered in, Dharmesh, for the QIB or the IPO process?
I think that definitely the need of the hour is to reduce down the number of list, the time taken to list, because there's an uncertainty from the time you bid in an IPO till the time it lists. For example, if you bid in an IPO today or in the next week, it will list after the budget. So you know what kind of volatility a budget brings in India. Hence, cutting down the listing process itself is going to be, it definitely will help this entire IPO and the FPO process. And maybe, do tinker around with certain technical issues like, extending the QIB guidelines to the timings to 6 o'clock or, some kind of small stuff which can definitely add value to this whole IPO process.
Mr. Baijal, do you think in your eyes, and this is a debatable point or point of debate, that the government should only approach this disinvestment program with the sole and only objective of raising the kind of capital that it wants to, and it doesn't matter which quarter that money comes it from? Or do you think it is in its larger interest to try and do something which stokes interest in the capital market, for which it may have to sell a bit more paper than it is selling, say instead of 10%, maybe it sells 12% to get the same amount of money? Do you think there's a larger objective there, or should be, or it should be just how much money it can raise, even if it means selling to 5 institutions?
You see, 10 to 12% makes no difference. The issue really is whether you go beyond 26% or whether you go beyond 50%. That is the issue. And those are, as I said earlier, political decisions only the political government can take. But please remember, these shares that the government holds are shares of the public, really, because they have invested in those shares. Now, if they are shares of the public and I hold those shares in trust, I must try and get the maximum price for those taxpayers. This process does not give them the maximum price, and that's an issue for debate.
Dharmesh, you would have had a good sense of investor sentiment, institutional investor sentiment last week. Was this merely about the way the market was correcting on NTPC? Because, otherwise, whichever way you cut it, it's a blue chip stock. It should be on everyone's must-own portfolio, and as was generally agreed, the price was lucrative enough.
I think that's purely during the market condition. There is a risk aversion out there right now, and the global markets and the turmoil which you saw last week, it just landed in the wrong week of the year. So I think there's more on market conditions rather than the interest in the stock at this levels, especially at 200 levels.
So you think had this happened 2 weeks earlier, there would have been a much more different response to NTPC?
Definitely, especially for the long only and the guys who are looking for long-term investment, definitely at this pricing it looks attractive for them. So it's just bad luck that they landed in such a volatile week.
Are they still scared, the institutional guys, Dharmesh, or have nerves settled after the experience of last week with the news on Greece, Spain, etc.?
I think there's still uncertainty out there in the world, so I won't say that it's settled down. People will still look for global cues, what's happening in the next 2-3 days. US data numbers have been better than what people expected in the last 2-3 days, so clearly that should give some signs of hope. But in this kind of risk aversion, people will not be very brave enough to take decisions, especially so early on in the year when the new year has just started. Hence, they don't have any performance to back themselves to take additional risk. So everybody will play by the ear going forward.
So you see these outflows continuing, and are these generally cash calls which are being taken or cash creation calls which are being taken, or is there still a bit of that arbitrage unwinding which happened a couple of weeks back?
I think there's more of a cash call and people just want some liquidity now. And because people had a period of time in last 1 year had increased their exposure to equities, hence people are just cutting back down and increasing the cash levels in case they see some turmoil in the European markets, which has been there last week. So it's just a risk aversion, nothing else. The liquidity is still out there. I don't believe the liquidity has gone back.
Any either-or problem that these investors are facing, Dharmesh, where you have to choose between whether you want to be part of any primary market process or you want to save up that cash for a secondary market buy?
No, I don't think that there's any choice between both. It's just that they want to just sit on cash and wait for this entire game to play.
Would you say most of that has unwound though? Because it's important to understand what happens over the next few weeks. There's still a lot of these primary market issuances that go through before the budget.
Well, definitely people will look for the budget as a call of the market. So clearly, budget will set the new trend, whether it's going up or down for the Indian markets at least. And till that time, people will definitely like to have some cash in case, the budget has been good, they can invest immediately. And if not, then at least they're sitting on some cash and save themselves from any fall. It's a tough call, trust me, out there right now.
Is there any churn going on, Dharmesh, between secondary and primary, where people who want to participate in the large primary offerings are taking a bit away from the secondary market?
No, I don't think that's happening right now. I don't think the primary market, except NTPC, has got such large offerings coming, especially with the budget round. Maybe you'll see one REC, which hopefully should get a good response if priced properly. So I don't think that the choice is between selling secondary and going into primary. It's just sitting on cash.
Thanks, gentlemen, for joining in on this debate.